and welcome to the week ahead for the 10th to the 14th of October. Now, it's a quiet start to the week due to it being a bank holiday in the US, Canada and Japan, leaving the economic calendar essentially bare on Monday and Tuesday on the market-moving front. But traders will finally get to sink their teeth into some economic data on Wednesday. Now, the most notable economic report will be Wednesday's release of the FOMC September meeting minutes, though traders will also be anxious to hear what Fed Chair Janet Yellen has to say during her speech on Friday evening UK time. There was a marginal downside surprise in the September US jobs report on Friday. US September payrolls rose 156,000, below market expectations for 175,000 increase, and against a revised gain of 167,000 jobs in August. The report suggests the economy is growing at a similar pace to last month, signalling steady jobs growth improvement. Now, we saw a knee-jerk reaction on the back of the report, seeing the US dollar stronger going in, but slightly weaker coming out. However, the markets took the US jobs report as nothing that should keep the Federal Reserve from raising rates. It's the last employment report before the Fed's November policy meeting on the 2nd of November. However, most investors are not expecting the Fed to take action in November, given how close it is to the presidential election on November the 8th. The odds of the Fed hiking interest rates in December have held firm at around 60% thanks to recent data, boosting appetite for the US dollar. So US dollar crosses and to some extent gold will all be in focus pre and post FOMC meeting minutes. Now, China's September inflation report will be in focus come Friday as well. The consumer price index rose by 1.3% year-on-year in August, which was the lowest rise since October and down from 1.8% in July. The market is expecting inflation to have risen 1.6% in September. Now, analysts still believe there is some room for China to loosen its monetary policy to stabilise economic growth. Moving on, a big question is, what's next for sterling? Now, the pound plunged to a 31-year low in a matter of minutes overnight Thursday in what traders say was a flash crash. The market is still debating what caused the initial sell-off. Theories are that it was a case of fat finger, which is the term used for a trader pressing the wrong button when executing an order, or algorithms. But the sell-off comes amid UK Prime Minister Theresa May warning of a hard Brexit earlier in the week. The fall below 120 matches the most bearish predictions made after the Brexit vote. Pound dollar is now hovering around the 124 handle, but the question is for how long, and can we expect more of these types of moves, as well as is this a bottom? Following the sterling flash crash, we are awaiting new signals to build a slightly longer-term outlook for pound dollar and are considering levels to watch. The market is hovering around 124.50. The first short-term levels to consider are 125 at the top side and 123.50 on the downside to trigger a further short-term move. However, there is a caveat attached, as we need to see where the market takes cable right now before we can build any real preferred scenario for pound dollar, so do tread carefully. At the moment, we are pretty much neutral between 126.50 and 128.65. The next level to focus on is at 126.50. If we do see a break below 126.50, we eye resistance at 128.65. However, if we break down below 126.50, we could see the potential for a further drop to 124.50. Now, as a bullish case, if pound dollar manages to surpass 128.65, we could expect to see a rise to 130.60, maximum 134.75. Touching on precious metals again, a rallying US dollar index and upbeat US economic data this week continue to put selling pressure on gold and silver. Now, gold prices fell to a fresh 4-month low on Thursday after dropping below its key 200-day moving average for the first time since February. Some analysts think gold's recent weakness could stimulate bargain hunting physical demand, with holidays in India, which is one of the world's largest gold buyers alongside China, just around the corner. However, with prices having trended lower for several months, we currently hold a fairly bearish outlook on gold at the moment. You can stay up to date with all the latest market news and technical analysis online by visiting our website. But for now, everyone, goodbye.